What's up traders, John Howell here, officialjohnhowell.com, and in this video we're going to market update to show you what's happening in the market, so let's get into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, so let's get straight into it right now. Right now we're going to have a quick look at the market update. You know, look at the S&P, the Dow, Russell, got Nasdaq there as well too. You know, looking at the SPY, obviously SPY was down, gold is up a little bit. But looking at there guys, the market's had a down day. We had a decent volume spike as well too, and you'll see that on the chart segment. And I'm not sure whether that's a sign for more downside to come, but we're not out of the woodworks yet. Meaning, the buyers are not completely losing control here. And let me explain what I mean here. I've been saying for the last, say, week or so now, that the market has been making these peaks and troughs, right? So they've been making these small little high troughs, and when we break one of these troughs, that's when we're likely to see some down move. But what's actually happened is it's come down to this trough and then just had like a little bounce. So this is where we're at right now on the S&P 500, and also you'll be able to see that on the Dow Jones as well too. But again, as I said before, we did have a down day yesterday with a decent volume spike. So there's obviously a question mark on where it's likely to go from here. We had a down move and we pulled back. Now we pulled back into that level of support level, and now it's a question mark. Now if we do break down again and we clearly break past that trough, then we're likely to see a 38 to a 50% retracement. 38 to a 50% retracement on the indices. So anyway guys, let's get to the charts. Alright traders, so let's get straight into the chart segment. What we're going to look at first is the S&P 500, and we can see, if I bring up my trendline drawing tools, we can see that we've made a high trough here, high trough here, high trough here, high trough here, and we're making a very small little sort of same trough, slight little lower trough, but you can see how it actually closed on the same level right through here. So that whole level still is support. We need probably a close below the 200 moving average, probably a close below this level here to say we're likely to get that decent pullback in the market. So so that's what we can see here on the S&P 500. Looking at the Dow Jones, Dow Jones, it is the same. It actually came down. It came all the way down and actually found support on this level and bounced back up, and we had a rally towards the late, sort of the last half an hour. The market started rallying hard, and well, not hard, but it definitely had started to rally. So you can see we're not at the woodworks yet. If we start to break below this 200 moving average and close below it, then yeah, we're likely to see that decent, another 3 or 4% pullback. Again, looking at the Russell had a nice decent pullback as well too, and also the Nasdaq as well too. But you can see the Nasdaq is still holding up through here. It hasn't given us a lower trough yet. So if we do get another down day, then if that happens, then we're likely to come down towards the 200 and even close this gap on the Russell. Now the thing is, I do see here guys, is I can see that we had a good volume spike today. It means there's a lot of people in this selling period through here, and the same thing for not as much as for the S&P, but we definitely had some consistent volume through there, and obviously not as much on the Nasdaq as well too. So right now guys, we're in a do or die situation on that there. So looking at gold had a small little update. You can see where the stochastics are as well too. We can see what's happening through there. If we have a look at the hourly chart, you can see how, looking at the hourly chart, the stochastics has ran right up the top here, and the market's just gone sideways through here. So I'm expecting a lot more downside on gold, guys. As you guys would know, I'm actually bearish, and these are my two levels of target levels, getting down to 102 and then even as low as 100. If it really starts to pick up on some steam, that's where I do see it all. So that's what I do see there. And guys, gold guys, we're not at the woodworks yet on the Dow Jones yet. If we do get another down day close below, especially close below 200, then that's when we're likely to see the overall 50% pullback. And even if we just look at, say, something like this here, we can see that we're in probably we're in like an overall sort of longer term channel through here, as you can see. So if I bring that up through there, what is that through there? So you can see that's the bottom of this channel, and if I create a parallel trend line and then I bring this up through to here, we can actually see that's where we're at right now. So let's delete that, and you can see that's where we're at right now. The resistance here broke back up, hold support, it's holding this support now. If we break back down, then I can't see a reason why we can't get back down towards this bottom of this channel. What's the S&P doing? Is S&P, not the S&P sort of made a double bottom, so it hasn't really made a channel there. But that's where the Dow Jones is, guys. That's what's happening now on that there. Russell is doing that. I'm just looking to see if there's any channels. The Nasdaq sort of has like a channel going through there. And if we create a parallel trend line, we can see that we actually have that is the top of the channel for the Nasdaq. So you can see that's where the top of the channel of the Nasdaq is, which is probably at the highs up here. If we do break down, then I can't see a reason why we wouldn't get down towards the 200 and where everything is right now. So lots of indecision in the market today, guys. Lots of indecision, and we'll just see how it all goes. And if we do hold here, we're likely to race back up, especially on like the Dow Jones and stuff like that. You can see how it's holding. If we do hold here, we're likely to race back up, and that'll be like all-time high. So it'll be racing towards that there. If we do hold here, and then we're racing towards all-time new highs. If we do break down, then we're likely to see a breakdown probably towards this channel as well too. So that's what I do see on the charts, guys. So, traders, market right now, gold came up just a little bit. I expect more downside, especially over the next couple of weeks on gold. More downside, or I'm in a position right now and I expect more downside on gold. Also, you can see on the indices there as well too, guys. You can see how that, yes, we did have a down day, but the market's holding that trough there. It hasn't actually broken the trough. When we do get a break of the troughs, which as you can see on the charts, that we have not actually broken the troughs all the way up yet. When we start to break that trough, especially on all the indices, when they start to do that, and we start to do this sort of stuff, that's this, and we start to do this, and we start to break down through here, that's when that happens, that's when we're likely to spend a week or so having that pullback we're all expecting. So we're not out of the woodworks yet. If we do hold here, we're moving to the high side. If we don't and we break down and we have another down day, that's the sign that I'm saying, cool, we're now ready for that pullback. So anyway, guys, Johnny Howell here. Remember, success can be yours if you go clamp. So step up, take massive action, and face your fears today.